Welcome back, my friends. Thank you so much for tuning in. This is Silver Slayer. So now let's talk about silver's price crashing. I do think it's safe to say this is happening. If you look at the 1 month chart, we saw silver up to almost mid $24 level, and now we're talking about possibly $18, $19, and that's within the past couple of weeks. So what is going on? We're going to cover that all in this video, talking about dynamic resistance levels, what the charts are signaling, going on to silver clings to intraday gains above $21, but it's not out of the woods yet. Gold and silver see price pausing ahead of the major U.S. report, and also if it will break below that psychological $20 level and even gold below $1,800. Why do I say that psychological $20 level? And just like at the grocery store, they're going to price something $19.99 instead of $20, even though it's only 1 penny, because just seeing 19 instead of 20 makes it look cheaper. And when silver breaks below 20, people are going to panic, fear, uncertainty, doubt, second guessing themselves. And that's why in my video yesterday, I put out a warning message explaining why you should never panic. And honestly, true silver stackers look at this as an opportunity. We don't panic, we do the opposite. We celebrate because we can get it for cheaper, lowering our dollar per ounce average. So I want to go over this article first. All of these were written today, fresh off the press, October 5th. So with that said, let's talk about this. Silver price fails at dynamic resistance. Here's what the charts are signaling. Silver price fails at dynamic resistance, and we're going into commodities, which have suffered from the U.S. dollar strength in September. Precious metals are just one category that reflected the dollar strength, as both gold and silver prices have declined significantly. And yes, anytime the dollar strengthens, you're going to see this. That's expected, especially when you're looking at major U.S. reports as well. A lot of fear, uncertainty, doubt, assuming, speculation, a lot of that's going to happen. So rising global yields led to strong demand for the world's reserve currency. As such, the greenback strengthened across financial markets while stocks declined. Silver has rallied since 2020 when it traded around $12. And actually, silver was the #1 performing asset in 2020. Believe that or not, it was. Gold was like number 5, but silver beat every other asset. I bet you never knew that unless you watched my channel, because everyone swept it under the rug. They hushed that. If it would have been gold or Tesla stocks, everyone would have been talking about it. But since it was silver, it didn't get much attention. But yes, silver was #1. And that's because it more than doubled in price in less than a year, but has struggled to break higher ever since. $30 silver proves to be strong resistance, just as $2,000 is strong resistance for the price of gold. However, the daily chart does not look that bad as it does in the first place. Is it too late to buy silver? That's a question that I'm sure a lot of newbies or people that are on the fence ask themselves. In 2023, silver price declined to $20 before rallying again. It failed at $26, where it met dynamic resistance. One can argue that the dynamic resistance in the neckline of an inverse head and shoulders pattern, and if that is the case, the market just works its way consolidating in the right shoulder, as it should do. And a lot of people say, silver's price is going down. Why is that a good thing? And that's because you don't want something to just go up, because then it's going to go down, since there's no price stability. Prices need to stabilize. It needs to go up a little bit, down a little bit, up a little more, down a little more. Just why the reasons it didn't last in 2011 or 1980 when it did hit $50, because it just kind of skyrocketed and it didn't stabilize at those $30 levels, those $40 levels. Just like in 2016, 2017 with Bitcoin, it went from like $1,500 to $15,000 within a couple of months. Prices didn't stabilize, so then as soon as that overbought territory corrects, or starts to turn backwards, it's going to crash, usually lower than what it even started at. So if that happens and silver breaks above dynamic resistance, traders will take a chance at patterns measured moves and that point to much higher levels. It's funny that people buy high and sell low. It's supposed to be buy low, sell high. People do literally the exact opposite of what you're supposed to do. It makes sense. It's psychology. And a lot of people don't understand, or they underestimate how much psychology plays in investing, because it's all perspective. You're making decisions off of your opinions and your assumptions and your guesses, and that's all psychology. Picture this. There's two different investors. The one guy sits on his couch, doesn't really do much research, is usually more of the glass half empty type of person, very anxious, finicky, always assuming the worst, doesn't really care. Or imagine that guy investing compared to someone who's very cool, calm, collect, looks at things realistically, does the research, doesn't let himself get freaked out. Which one of those two people do you think is going to be more successful? The second guy, of course, right? So anyways, a long entry is very risky at this moment. If contrarian traders would like to take a chance and buy the dip, the trade size should be as small as possible. Another thing I wanted to point out is the reason I think people buy high and sell low is because of media. When silver is taking off, everyone's talking about it, just like the Wall Street silver movement or even Bitcoin back in the day. Everyone's talking about it, friends, family, neighbors, a squirrel in your backyard. Everyone's talking about it because it's going up and they have that validation and confirmation that it can go that high. So you're more susceptible to buy in because you're like, I don't want to miss out on this. But then when silver's down, nobody's talking about it. The price is in the red. And you second guess yourself. You buy high and then sell low. The best way to invest is do the exact opposite of what the normal person does. Just do the exact opposite and you'll be good. Anyways, silver should hold above the $18 level in return to dynamic resistance. A daily close would signal more strength, and for that, the dollar's strength must reverse. That's true, right? We know the inevitable collapse of the dollar. It's nothing new. We only know how much worse it's going to get, and that is a fact, not an opinion, as we're almost $34 trillion in debt, and the dollar's lost 98% of its original purchasing power. That's inevitable. And since we know that's inevitable, and silver and gold are directly affected to a collapsing dollar, meaning prices would rise, 1 + 1 = 2. So this one's talking about how silver clings to intraday gains above $21, but it's not out of the woods yet. I thought that's an interesting statement. It's not out of the woods yet. So why? Silver attracts fresh buyers on Thursday, albeit it remains confined in a 3-day-old trading range. The recent breakdown below $22.30 is strong horizontal support, still favoring bearish traders. Another thing to point out is that we're heading into the holidays, and silver and gold are very bearish during the holidays because people aren't paying attention to the markets. They're with friends and family and traveling, and a lot of times even selling some silver to afford Christmas presents. And a lot of people are very depressed during the holidays, and that could affect that psychological aspect of it. It just isn't a very good time. But we do have the 2024 elections coming up, which could play a huge role. Silver regains positive traction during the Asian session on Thursday and built on the overnight bounce from $20.70 to $20.65 area, or its lowest level since March 13th. So from a technical perspective, the oversold relative strength index, or the RSI, on the daily chart is seen as a key factor prompting some short covering. So I don't want to go too much into this. Let's just go through the highlights. So we're looking at this downward trajectory, which could get extended further towards challenging the year-to-date TRO, and levels are just below that $20 psychological mark set in March. And that's what I said, that word, that psychological level, because if it does break into the teens, it could get pretty ugly pretty fast for that reason alone. So this is another important one. This was also written today. Like I said, all this stuff was written today, fresh off the press. This is breaking news to some extent. So gold and silver see price pauses ahead of major U.S. report. So gold and silver prices are not straying too far from steady levels in quieter early U.S. trading Thursday. Traders have both markets in pause mode ahead of Friday's U.S. employment report. December gold was up 40% or 40 cents at $1,835, and December silver was up 0.07 cent or 7 cents at $21.23. Traders are looking ahead to Friday's September employment situation report from the Labor Department. So today you're going to see a lot of speculation, a lot of market volatility, just because people are assuming. And when people go off speculation, it's usually pretty crazy. The key non-farm payrolls numbers expected to come in at up to 170,000 compared to a rise of 187,000 in September's report. Wednesday's big downside in the ADP jobs report has many now thinking the more important jobs report Friday will also be a miss to the downside. A weakening U.S. economy would actually be a good thing of sorts for the marketplace, in that it would likely cool the ascent in bond yields. So yeah, I mean, that's where we're at right now. They say the silver bears have the solid overall near-term technical advantage, and prices are trending lower on the daily bar chart. Okay, so now let's go into this one, which is talking about silver going below that psychological $20 level. On September 19th, he published an article titled "The Moment of Truth for Silver," and he really meant it. The price of silver was contained between two major trend lines, and technical traders were waiting for the break. What got me worried, or him worried at least, was the fact that everyone's favorite white precious metal had retraced hard after briefly touching $25 and bounced off a support level around $22.30. What also got him worried was the actions in other markets, which have a huge influence on silver and gold. And that is something I think will start to change over time as the fundamentals outweigh these other factors that he's mentioning. So he goes over this. I'm not really a chart guy too much, but I like to share it because I want my content to be diverse and everyone being able to get what they need out of my videos on a daily basis. Plus, it is good to stay up to date. Silver bulls have got wrecked. The brief bounce at support has no momentum, and the sellers forced to break below support and the trend line on Friday, September 29th, 2023. And after seeing this break, I knew silver was in for a rough week. And clearly other traders saw the same break, as Monday saw a short pile in, with silver dropping over 5% for the day. Now it's testing this support zone, which is the first target for shorts. A bounce here is most likely bears taking profits. And for more unfortunate news for silver bulls, this relief could just be a dead cat bounce. We are seeing evidence of sellers jumping back in, as evident by wicks of the above candles. So some people are going to say actually sell. It's weird you know, that I mean, these are day traders, I guess. People that, you know, aren't in this for the same reasons you and I are, or don't really look at the macro and more at the micro, and they're paying more attention to the day-to-day stuff or the financial side of things more than the industrial factors and the longer term. People that are just buying silver and throwing it in their safe and holding it for 10, 15, 20 years, you know, this isn't the stuff that you should be worried about. The only reason you could be using this type of information or looking at the price every day as something that could be beneficial to yourself is if you're planning on buying. If you want to maybe say, hey, if silver's going to keep going a little bit lower, maybe I could hold off and I could buy next week and get it for cheaper. But if that's not the case, then whatever silver's price is doing today really doesn't matter, and that also means you shouldn't let it affect you at all. You don't need confirmation or validation that silver can go higher. We know it will. Most people, when they're investing into something, they need that validation or confirmation. And when they don't have it, they second guess themselves. And that's why I say never get into something unless you truly understand its value, or else that's just gambling. So anyways, yeah, that's kind of what's going on right now. Let me know if you enjoyed this video. If you did, make sure to like this video. I'm doing a giveaway, so make sure you go enter links in the description. If you wanted to purchase from Miles Franklin, highly recommend you do. New deals every single Monday. Great company, most respected. Send an email to info@milesfranklin.com. Let them know Silver Slayer sent you. They'd love to hear it. So yeah, anyways, thank you so much for tuning in. This is Silver Slayer. I'll see you guys tomorrow. Peace.